In part 1 of our journey, we discovered how ancient civilizations laid the very first stones of banking. We saw how temples became treasuries and how simple loans carved into clay tablets started a revolution. Now, we're leaping forward into an age where money didn't just facilitate trade. It began to build empires, conquer continents, and reshape the very fabric of our world. Get ready, because this is where banking gets really interesting. Welcome to the Italian Renaissance, a time of incredible art, science, and a new kind of power, finance. In bustling city-states like Florence, powerful families, most famously, the Medici, weren't just patrons of the arts, they were the architects of modern banking. They were visionaries who established a network of branches across Europe, creating the first international banking system. Imagine sending a message instead of bags of gold. They introduced letters of credit, which allowed merchants to travel and trade without carrying risky, heavy coins. Even more revolutionary was their perfection of double-entry bookkeeping. Every credit had a corresponding debit. This simple but brilliant system provided a clear picture of financial health, preventing errors and fraud. It was so effective, it's still the gold standard in accounting today. Thanks to the Medici and others, Florence became the undisputed financial capital of Europe, the Wall Street of its time, funding everything from wars to the construction of magnificent cathedrals. As nations grew more powerful and their ambitions grander, they needed a more organized way to manage their money. Wars were expensive, and kings were constantly borrowing. This led to the birth of a groundbreaking institution, the central bank. The pioneer was the Bank of England, founded in 1694. Its primary job was to manage the government's massive debt. But it did so much more. It started issuing official banknotes, a standardized currency that people could trust. This stabilized the economy, controlled inflation, and gave the government a powerful tool to steer the nation's financial course. The idea was a massive success. Soon, other countries followed suit, establishing their own central banks. This was a pivotal moment, marking the shift from private family banks to national financial systems that could support industrial growth and global expansion. Think about how inconvenient it would be to carry around hundreds of heavy gold and silver coins for every major purchase. The solution was simple, but transformative: paper money. Initially, these were just receipts, or banknotes, issued by banks as a promise to pay the bearer a certain amount of gold or silver on demand. People trusted these notes because they were backed by the bank's reserves and, increasingly, the full faith and credit of the government. This innovation was a game changer. Commerce exploded. Transactions became faster, lighter, and more efficient. It fueled economic expansion on an unprecedented scale, allowing for larger investments and more complex trade deals. Money was no longer just a store of value, it was a dynamic force driving progress. With these new financial tools in hand, European powers set their sights on the rest of the world. The age of colonialism wasn't just about ships and armies, it was powered by finance. European banking systems spread across the globe, following the flags of empire. International banks like HSBC and Standard Chartered were established to finance the colossal projects of the era. They funded the construction of railways that cut across continents, financed burgeoning industries in colonial territories, and lubricated the wheels of global trade, moving goods like tea, cotton, and rubber around the planet. Banking was no longer a local or even national affair. It had become a truly global system of power, connecting economies and determining the destinies of nations. Fast forward to the 20th century, and the pace of change accelerated dramatically. The very concept of money began to dematerialize. First came the credit card in the 1950s, allowing us to buy now, pay later. Then, in the 1960s, the first automated teller machine, or ATM, appeared, putting a bank branch on virtually every street corner, accessible 24/7. But the biggest leap came with the dawn of the internet. Online banking moved our financial lives from physical ledgers to digital screens. Money became invisible, just numbers flowing through cyberspace. With the smartphone, banking literally entered every pocket. We could check balances, transfer funds, and pay bills from anywhere in the world. This was the ultimate convenience, making finance more personal and accessible than ever before. And that brings us to today, on the cusp of yet another financial revolution. Technologies that sounded like science fiction a decade ago are now reshaping the industry. Artificial intelligence is being used for everything from fraud detection to personalized financial advice. Cryptocurrencies like Bitcoin are challenging the very idea of government-controlled money. Fintech startups and mobile-first banks are offering seamless, user-friendly services that legacy institutions are scrambling to compete with. The fundamental questions are changing. It's no longer about where your nearest bank branch is. The question for the 21st century might just be, with all this technology, do you even need a traditional bank at all? From ancient clay tablets to the centralized digital currencies, the history of banking is ultimately a story about one thing: human trust. It is the story of our incredible ability to create systems of shared belief that allow us to cooperate, build, and dream on a global scale. We hope you enjoyed this journey through financial history. If you learned something new, hit that like button, subscribe for more deep dives into the stories that shaped our world, and let us know in the comments what piece of history you'd like us to explore next. Thanks for watching.